itself in the background, but somehow nobody is paying attention to it. Public attention is entirely absorbed by tech billionaires and whether AI is coming for our jobs, completely missing the structural shift happening right under our noses. Look at this chart tracking the US dollar's share of global reserves. In 2000, the dollar held 71%. Today, it's dropped below 58%. Extending the timeline backward reveals the severity. Global reserves just hit their lowest level since 1992. This statistical decline represents a structural unwinding of the invisible engine that powers the United States economy. Nobody voted to give America this status. The dollar became the default global currency as a historical accident. After World War II, most of Europe and Asia were rebuilding from scratch, and the US was simply the last major economy left intact. That default status created a captive market. If countries wanted to trade internationally, they were forced to route their money through US correspondent banks in New York. This visual map shows how forced routing creates an exorbitant privilege. Because nations need dollars to execute trades, there is constant demand for US debt. That allows America to borrow at lower interest rates, saving the country an estimated $200 billion annually. This forced infrastructure grants the US two secondary powers. First, it provides a bird's-eye view over global trade data. Second, it gives the US ultimate regulatory jurisdiction over those international transactions. This infrastructure functions as a mechanism for American monopolistic control, keeping international trade tethered to a singular US-regulated rulebook. A monopoly maintains its grip on a captive user base for decades. It only fractures when the operator weaponizes that power against the users. In 2022, the US and its allies froze roughly $300 billion in Russian sovereign assets and severed the country's connection to the global banking messaging network. The move signaled to every other central bank that their own sovereign reserves could be restricted at any moment. It proved that Washington could turn off an entire nation's economy instantly. For emerging markets, the reality was stark. They needed a parallel financial infrastructure. Enter BRICS. What began as a small coalition of emerging markets has expanded into an organized resistance, now representing over a quarter of the global economy and nearly half of the world's population. They are actively building alternative plumbing for global finance. Platforms like mBridge create cross-border networks, allowing countries to settle trades directly with one another, bypassing New York banks. A new blockchain tool called the Unit launches in 2026. Backed 40% by physical gold and 60% by international currencies, it creates a neutral measuring stick for commodities, breaking the dollar's monopoly on global price discovery. These operational replacements are designed to neutralize the three pillars of American financial control: data surveillance, jurisdiction, and forced debt purchasing. The defensive measures are already in motion. Since 2022, global central banks have been buying gold at the fastest pace in modern history. At the same time, we are seeing a succession of non-dollar trade agreements. Brazil and China are now settling bilateral trades in yuan and rial, while India recently completed its first purchase of UAE crude oil using Indian rupees. But a significant fracture is happening at the core of the energy market. Saudi Arabia is openly considering accepting Chinese yuan for its oil sales, putting pressure on the 50-year-old petrodollar framework. These shifts show that a dollar no longer holds its historical monopoly on how the world chooses to settle its debts. There is a common misconception that a single currency, like the yuan, has to rise up and defeat the dollar in a head-to-head battle. But no single currency or infrastructure is going to overthrow the greenback on its own. The truth about the dollar's dominance is that nobody chose it because they loved the system. They chose it because there was a total lack of alternatives. Looking at this model, we can see the actual mechanism that breaks a monopoly. It's optionality. It is the simple introduction of choices to a market that used to be held captive. The US dollar is not being violently overthrown. As the rest of the world finally gains the power to choose, the dollar is quietly and mathematically being decentralized out of its dominance.